you and RB2B cash flow significantly more money than Vector does. Like, period, end of story, right? Like, if you're a founder out there and you're trying to make money, your fastest path to that individually is probably bootstrapping or raising like the minimal amount you need to like build what you're building. We feel really convicted that building a venture-backed company was the right decision for us. We're all or nothing, right? Like, we either deliver a $10 billion like life-changing sort of technology for our employees or our shareholders, or we lose everything. Versus Adam, I think you got way more optionality for what you're building than I do. And he was like, dude, you're spending way too much trying to be like an inventor and like find something new. Just find something that is already broken, that people are paying a lot of money for, and just do like one thing better.
Let's break down a strategic rivalry over 2 years and why we both like pivot in different directions.
Welcome back to the show. Today's guest is the founder of Vector, a former rival of RB2B who is now tackling a much bigger go-to-market problem. We're excited to be joined today by Joshua Perk. Joshua, welcome to the show, my friend.
Thanks for having me. I didn't think this was ever a show I would be on, so this is kind of weird.
Josh, you know what I'm slightly annoyed by? If the title of this show were like how to book 17 demos using 5 words of email copy in 4 minutes,
yeah,
we would have had hundreds of people show up.
No,
something that's actually meaningful, like let's break down a strategic rivalry over 2 years and why we both like pivot in different directions. No one cares.
Dude, it's the difference between LinkedIn hype versus actually building a company. But the people that are here give a shit about building a good company.
Mm-hmm.
We know that for
sure.
And
by the way, I would I'll go for the higher quality, smaller audience all day long. To that on that note.
Yeah, I agree.
Well, anyway, it's just an interesting thing. It's like these, cold email workshops is like, it's crazy.
Well, that's the only way you can grow your business is cold email. There's no other option. So you got on it.
No other way. There's nothing other than cold email that exists in business.
That's right. That's right. Well, there's a lot of points to cover today. But Adam, what are 3 things people will learn if they stick around until the end today?
Okay. If you stick around till the end of today, number 1, you'll hear exactly why one of the boldest free offers in SaaS history was actually hurting a business and why a $399 a month entry price is actually a better growth lever. Number 2, you'll learn about how VC influence will steer decision-making and positioning bets. And number 3, you'll see the raw decision-making between 2 founders who built similar tech but made completely different bets on how to win the market in 2026. And the last thing, if you stick around at halftime, we'll drop the swag.
The infamous swag drop. There we go.
And Josh, we got to get you a hoodie too. I got my hoodie sitting around here somewhere. It's just hot.
I will take one. I won't wear it in public meetings, but I will take one.
Could you imagine like going to meet your investors? Like, dude, got a great hoodie.
If you pass on me, go check out RB2B. They're a good company too.
Mm-hmm. He'll burn off the green sunglasses on the pocket.
Yeah, there you go.
Well, let's hop into it. We got a bunch of stuff to cover. A great place to start. We like to do this every week. For context, Joshua, could you please tell us what Vector is today? We're going to go through the whole story. Yeah. What is Vector doing today?
Great question. So now Vector is a platform that helps B2B marketers build hyper-targeted contact level ad audiences and know who's engaging with their ads, even if they do not convert.
Oh my gosh. Wait, I need that.
You can tell I talked to a lot of VCs, right?
Wait a minute. Yeah, by the way, one thing we talk about all the time on here is like the quick, like really good, really compelling quick pitches. That was probably one of the shortest ones we've had on the show. And I don't think I've ever said.
Because I went to Y Combinator. Y Combinator just like pounds 2-sentence statements into your head over and over again so you can pitch VCs.
And by the way, you worked at one of the marketing machines that I respect more than any of the others in the world, Drift.
Yeah.
Whenever I'm wondering how to do anything, I'm just like, what would Dave Cancel and Dave Gerhardt do?
Oh, dude, the two Daves, and we'll get into it, but one of those Daves was a big reason I chose to be a competitor with you. So there's those guys are absolute geniuses. They were building brands and media companies long before anyone knew what founder.
Wait, I want to hear about that.
Yeah.
I don't know this story.
Okay, so Vector's story so anytime you hear a founder that says like, "Oh man, I saw this shift in the world and I built a company around it and then we just built this billion-dollar thing," they're all full of shit, right? Like nobody sees the world that clear. Like you build a company, you try a bunch of stuff and then you look back at what worked and that's the story that you like tell in history. So like a lot of founders, David Cancel was one of them, will like say like, "Hey, we saw this shift that was happening the way businesses buy from businesses, so we invented Drift." The reality is like Drift was like 17 pivots before it was a chatbot. And we were going through the same journey. We went into YC in winter 23. We thought we had a really good idea. We got rejected a bunch. We couldn't fundraise. And for like 18 months, we were pivoting. And so I called David Cancel and I was like, dude, I left like a $300,000 job to like be a founder. Like my kid's not in dance anymore because of like the sacrifice I made. And I can't figure out how to be successful. And he was like, dude, you're spending way too much trying to be like an inventor and like find something new. Just find something that is already broken that people are paying a lot of money for and just do like one thing better. And so like Adam, you actually weren't our competition at first. Our like enemy was like 6 cents. We're like, man, people are paying a lot of money for ABM platforms. We should just find the one weakness, which for us, we thought it was contact level versus account level specificity. You just happen to be in sort of the crossfire as we sort of
Yeah.
went towards that angle.
Well, thanks, Dave Cancel.
I think it worked out fine for you from what I've seen on your revenue dashboard. You're not doing too bad.
And when did you start Vector? What was like the launch date?
I quit my job at the very end of 2022 and January 1st, 2023, we were in YC winter 23 batch.
Okay. And what was the YC sort of pitch? Because I know a lot of people come in with one thing and then come out with something a
Yeah.
little different. So
Do you guys know, do you know what Vendor is? It's a Boston-based SaaS company
yeah,
for like
I do
procurement.
know. I know
Yeah.
quite a bit about Vendor. Yeah.
So when I was at Drift, I was a sales engineer and I was leading the sales engineering team. And we would work on these like 6 month, 12-month deals, right? And we'd say, oh, Drift is 50 grand or whatever. We put all this like sweat and equity into it. And at the very end, someone would be like, hey, we're ready to buy Drift, but we know from Vendor that people will actually buy Drift for $30,000 instead of $50,000. And we would just get like stabbed right at the end of an opportunity. And I just hated this. I was like, man, we worked hard for this. And they have this like intelligence that tells them from Vendor that we'll take less money. And so our initial YC pitch was the opposite. We were going to try to pitch a bunch of CROs to crowdsource their CRM data. Just like plug in your CRM, your Salesforce, your HubSpot data. We'll anonymize it and we will find trends about who you sell to. So if you're selling to Stripe and we have 27 historic deals that says like Stripe negotiates 30% at the end, or like don't work with Janice in procurement because she's like a legal nightmare. Like we would have all these insights to give sellers to give them the upper hand in deals. Sadly, CRM data is really hard to get people to hand over. So it was like a cold start issue and we just never got off the ground.
It sounds cool if you could get all the data.
Yeah.
It
Yeah.
also, yeah.
We had like
Cool to
five,
see.
we had like five because I'd reported to CROs my entire life. We had like 5 people I used to work with. They're like, yeah, if you build that, we'll buy it. So we quit our jobs and we were starting to build it. And we're like, oh, we can never buy that. I was like, thanks, dude. Thanks for telling me that after I quit my job.
Yeah, I mean, and that's a really important note about startups. It's like until the money's in the bank, words mean nothing.
Nothing.
You know what I mean? I mean, they mean a little more than nothing, but like not much more than nothing.
Yeah.
You know what I mean?
Yeah. Everyone's your friend, so they have to throw a credit card down, right? Then you'll find out really quick whether you have product market fit or not.
Yeah. Yeah. So like, can we take this? I'm intrigued by this. You know, your initial rival was 6 cents. So like, when did you guys launch?
So like the rendition that is relevant for this, like when did we
Yeah.
launch sort of in that space? August of 2024.
Okay, we launched in March.
Yeah.
Did our traction have anything to do with it?
100%.
So like you,
Yeah.
and then our buddy Nick Weldon did too, right?
Oh yeah. 100%. So there's a couple things. So I had this like this eureka moment where I was like, okay, I'm not going to build something new. I'm going to find something that exists and I'm going to find like the one problem with it. So like the initial enemy was like 6 cents demand base. They have all this money, all this market cap, and from my experience at Drift selling to marketers and sellers, the fatal flaw was contact level, right? Like they couldn't actually do anything with it. So marketers loved it, but sellers hate it. And so we're like, okay, we'll build a contact level ABM platform. And for us, there was like three pillars to building that out. There was contact level advertising, contact level intent, and contact level site de-anonymization, right? Like these are the three things that basically ABM
Yeah.
platforms do. And we're like, all right, which of these pillars do we start with? Maybe this really loud, noisy guy on LinkedIn that's saying that like site de-anonymization is a really good thing to have. Maybe we'll let him like plow the way for us, and then we'll just be like the enterprise mature version of it. And so yeah, 100%. We were watching you build in public. We're like, well, let's fucking do what that guy's doing.
And this brings up a very important thing about problem with building in public. I advocate for it, especially in the beginning, because it's just so hard to get attention. Everything is working against you when you are a startup just getting off the ground, but you will create competitors for yourself if you happen to find some product market fit.
Yeah.
So,
but I mean, it worked. Like, look how it played out, though. Like, we like by all for your sort of followers that don't have the followership that you do, right? Like, you might see like a vector. It's like VC backed, well funded. Oh my God, I'm building in public. They're gonna steal what I'm doing. We stole what you were doing and still pivoted, right? Like you as a bootstrap founder, like still like lasted longer in the space than we did.
Well, yeah, I kind of feel like the last man standing, because to elaborate further on that point, I think that there's two things happening in this contact. If all you sell is a contact level DNON and nothing else like us, for like a set it up in 3 seconds at a very low price, there's I think three key issues. Number one is like the product is inherently, it doesn't deliver on the promise of the one sentence, of the interpretation of the one sentence when you say what it does.
Yep.
When you say, I can de-anonymize who's on your website, immediately, almost everyone in the world, the first thing they think is, I'm just going to spam them and book demos when I sleep. Like, that is the thought. And like, it doesn't do that for hardly anyone. And the people who want it the most are the people who are the farthest away from product market fit and the least likely to get success with it. I believe it still is, if you were going to build like which a bunch of our former competitors have, a multi-signal omnichannel outreach platform, it's still probably the highest value signal. But on its own, it doesn't really do anything. It doesn't do what you want it to do, right? So like, that's problem number one. Problem number two is, I think with RB2B in particular, because of what you alluded to, my founder brand thought leadership, top of funnel, whatever you want to call it, it just looked easier than it actually was. Like there was an unbelievable thing happening, this like big awareness into this freemium offer that like, what are we at 6.7 million ARR or something? Like if I didn't have that, we'd be at 1 million.
Yeah.
And part of the reason, so it's like, we're not charging a lot of money. The churn is high because the product doesn't deliver on this implicit promise, which by the way, I can't do anything about. I can't like say what it does and then qualify it by saying, by the way, I know what you're thinking. You can spam these people in the book demos. That's not how this works. Like, that's not how you describe a product.
No.
So like, really the only reason this business works for me is because I'm running it so lean and I have this like unbelievably inexpensive, massive source of top of funnel.
Yeah.
And everybody else who tried to compete with us because A, they saw it was working, and B, Nick Weldon hit every single go-to-market and data vendor up and said, look, Adam's making a bunch of money over there. You should add this to your product suite. Like, and it's not worth it for anybody else.
No, 100%. I don't know if I mentioned to you. So Nick Weldon, for those that don't know, is the founder of 5x5. Did Nick ever tell you why we were able to do what we did outside of being VC backed?
No, I think that he considers that to be confidential.
Oh, I'll fucking.
He's actually no. I think he'd be fine with you saying it. I just think he doesn't want people thinking that he's sharing, kind of inside information with everybody else.
I appreciate.
He knows and deals with everybody.
Yeah, which I appreciate. It's funny because like the data space is a bunch of dudes in trench coats, and there's like some weird things that they stand on, like in a good way, right? Like a lot of them are just snaky, And you just alluded to like Nick went and sold this technology to everybody he could, which I don't blame him, but then he'll like stop short of like violating the trust, which I appreciate. So I don't know if I've ever told you this. We acquired like a subsidiary or like a child company called Flow Engine that Nick Weldon and Brian Perks were building like long before they started 5 by 5. Uh,
Ah,
and so we got like some nice data advantages in 5 by 5 by acquiring
yeah.
that. And so yeah, we kind of saw what you were doing and we're like, shit, well we can just give that away for free because like that's not our final act, right? Like that's just something that will bring people in and we'll sell them what we actually want to sell, which later turned out to be intent, and then we pivoted from that and we realized that like site de-anonymization is actually the attribution layer of advertising.
So first, can I talk about my emotional state when you like came to market with that? Like,
Yes.
so at first I was just like, I think the first version was just like RB2B is free and we're going to try to sell you offsite intent. And I was like, all I have to do is wait this out because offsite and it like if people can't book a demo off of their own website traffic, there is no way in hell they're going to be able to book a demo off of people not on their website.
Yeah.
So like I was like, okay, fine. This is going to be painful. It's annoying. It's probably going to take some ARR from me, but like whatever.
Yeah.
And then you kind of sharpen your pencil a little bit and it was like very, very painful because kind of like it was like every way I looked at it, you just like positioned against my offer incredibly well. So like number one, you had 1,000 free leads into the Clay agency ecosystem because you gave your API away for free,
Yep.
which just crushed me because like I wasn't doing that. I didn't want, since you had already made that move,
Yeah.
countering that move is stupid. You're like, oh, what you can have 2,000 lead or whatever, right? Like, it's like trying to compete against MailChimp when I was had an email service provider. It's like you can't be more free than free
Yeah.
if you were the first mover free. So like that was really annoying. And then you had this like 25,000 contact plan for $400, and
Yeah.
my $400 plan had like 800 contact. It was just
Yeah.
something that was like so much bigger, and I didn't know what to do. Like I was just and then for some reason 6 months later it didn't bother me as much just because like in the beginning we were closing quite a few enterprise deals. I felt like they were all just going to you because we were getting $5,000 a month and you were selling it to them for $400.
Yep.
So after like 18 months we didn't have a single one left.
Yeah.
And then I thought you were only targeting them. And
Yep.
my average subscription price was settling into like $225, and your
Yep.
cheapest thing was 400. And I was like, we're just like not even fishing in the same pond anymore. And like you're
Yep.
talking about ads and stuff like that. And like then it stopped bothering me. But there
Yeah.
was like, I just didn't even know what to do for
Yeah.
like 6 months. So I didn't.
Yeah. Dude, it's like it's funny because like you and I like we've had calls. Nick Weldon like connected us like years ago, right? And like I think you and I see the world the same way, which is like we're building businesses, right? We're not building enemies here, right? Like
Yeah.
I looked at your marketing and I'm like, this guy's like pretty good at this stuff. So it's like it's shitty to hear on the other end what we cause, because I've been there as well, seeing other people launch stuff and be like, man, how are we gonna combat that? But no, it was. Can I tell you what we did to like win in the enterprise? Like we were dirty against you, man. Like we we
Sure.
we so now, like to your point, like we totally shifted. We focus on like mid-market and enterprise. We're focusing on like super mature companies. They're probably running a lot of dollars in ad spend. If you to this point, like sometimes people still come into our chat and they'll be like, hey, we only have 1,000 site feeders and RBB can give us it for $99 or whatever. And we're like, cool, go do it. You're not our focus anymore.
Yeah.
But every once in a while we were still sort of differentiating the brands, we would get like a mid-market or an enterprise company that's like, well, what about RB2B? And we pulled out like the drift versus qualified playbook. I don't know how many people like in the chat like followed this journey, but Drift was this like incredible company that eventually got crushed by qualified, this incumbent. And one of the things qualified did really well is they built a bunch of pillars that by themselves really didn't mean much, but if you collated them all together, you're like, fuck, I feel like I have to choose qualified. So like qualified's example was like their whole thing was we're built for Salesforce. And they backed this up by being like, we're funded by Salesforce. We're in the partner exchange. We're built on the Salesforce cloud. They would do all of these things that like by themselves didn't matter. But at the end of the day, we'd lose deals to qualified, and people we'd ask why, and people would be like, oh, I don't know. Just like I feel like they're better for Salesforce because we use Salesforce. So we did the same thing for you. Like we didn't have like one particular thing, but we were like the dude with long hair that's like picking fights on LinkedIn with other folks. That's who you want to trust your enterprise with. This like this it's already a shicey technology, and you want to trust that guy with it. And we would just like collate all of these things. Eventually, people would be like, "Yeah, I don't know why, but I just can't work with Adam." And we're like, "Cool, you can work with us."
And there you go. Baz was like, how do we play dirty? It just you attack. I mean, that's like a political campaign. You just like attack the person's character.
100%. And the truth is, you're a good dude, and you have way cooler hair than I do. But like, it worked for a while, so we did.
Yeah. Well, congratulations. I don't know how we would have defended that. I mean, we didn't even have any salespeople, so like,
You just start shaving your head.
yeah.
Yeah.
So when did you how long did you offer the free thing, and then when did you cut that off? And I guess why? I'd probably have an idea, but I want to hear.
Yeah. So something that we learned along the way is that good decisions can still be good decisions, but not good decisions forever. Right. So like offering the free plan, it thrusted us into the market, um, with this like perspective of like, how are they doing this? Like, how could they possibly give away someone else's entire company? And it was one of the reasons we became a fairly good household name. Um, and so I think we offered that every from September or August of 2024 up until essentially like November or December of this last year. Like we only recently turned it off, and a bunch of our customers that are still on the free plan, we're honoring that to them. We haven't completely shut people off, but we don't offer it like out of the gates for net new customers anymore. And and the reason for that is we realized that we were actually getting your guys's ICP when we didn't want it, right? So we would have
Yeah.
people come in and they'd be like, "Hey, we got the free pixel," and our support channels would be blown up, and they'd say like, we'd be like, "Hey, have you ever thought about advertising?" Like, advertising? I'm a 4-person startup, right? Like we haven't thought about it at all.
Yeah.
So there was this huge discrepancy between where we wanted our customers to mature versus how much time horizon it would actually take them to get there. And so it was actually doing us a disservice. We were like super distracted trying to support this business that wasn't ours to support.
I'm also curious too. Like I know in the beginning, I'm sure we came across the same sort of fundamental feedback from everybody, which is like, okay, I'm getting the data. Now what do I do with it?
Yeah.
Like I'm getting all like, what do I do? And
Yeah.
we tried education, these different things. What I guess what were your ours was all kind of education and community and like
Yeah.
kind of going down that road. Did you have
Yeah.
a different approach, or was it just, hey, we're probably gonna have to pivot out of this?
Yeah, we tried to do the same thing you guys did, educate them into, how to take the data and do something with it. I think we actually had like slightly better luck because we were dealing with mature enterprises. They had the resources to build stuff around that, right? They had tools and all of that, right? The lower you go into the market, the more customers want your product to do everything. And the higher you go, they've got sales left, they got outreach, they got tons of money for clay and all that sort of stuff. So we were actually able to educate them fairly well. But my problem was I didn't believe in the larger grand scheme of where it was going, right? Like again, being VC back for better or worse, like I need to build something big with a big outcome. And I saw all these other folks that were trying to step on Adam's toes, in like the signal space and the sales outbound space, and they're trying to add this as a signal and all this. And I was like, man, we either have to go do the same thing, add a bunch of like sales actioning layer here, which it seemed like that's what everyone else was choosing to do, or we need to do something entirely different. And when we looked at sort of this pivot in July, we noticed that our best customers were the ones that were using us for advertising, right? Because like when you think about it, the value of a anonymous site visitor when they're organic versus the value of an anonymous site visitor when you've paid money to drive them to your website is significantly different, right? They already feel like they've got $20 CPC opportunity cost, right, in that visitor. And so there's this whole other persona outside of go-to-market engineering, outside of ops in the paid media, performance marketing, demand gen that's like, shit, my job's on the line if I can't prove that advertising's working for us. And so that's where it kind of we're like, aha, instead of trying to convince people to use Clay and go out, outbound to these folks, what if it was actually the attribution layer for this other thing that you're investing a bunch of dollars into?
Yeah, I remember getting that feedback early from people of like, hey, it would be really cool if you could do this for ads. But it was just like it seemed it's so hard to look back and remember like what you almost like what you didn't know at the time. It's like
Yeah,
hard to remove current
yeah,
knowledge, but like
yeah,
yeah, I remember us talking about it. I can't remember the rationale for what, and I think maybe part of it too gets into like the complexity of the build and it being a pretty unknown thing versus like keeping it simple, knowing that the Slack sort of like feeding free profiles to Slack was with the
yeah,
megaphone that Adam has was going to do what we needed RB2B to do from a revenue standpoint. And remember, RB2B is a product under the retention brand. It's a smaller revenue line than retention.com. For folks that don't know, the R in RB2B stands for retention, retention.com. So I guess this would be an interesting point to bring up this like, you know, Joshua, you were Y Combinator, VC, and Adam's bootstrapped through and through. Retention was bootstrapped. The business before was bootstrapped. RB2B is, of course, bootstrapped since it's under retention. So I guess it would be interesting to hear both of you give your lens on like when you started, Vector RB2B, and what the goal was for growth, revenue, all of those, and kind of where it is now. Because I think that'll give a lot of context to people in terms of like your how your definition of success alters your or not all, yeah, I mean it does. It alters your decision making. So I don't know who wants to
Before we
start.
do that, Pete,
Oh, it's
does the
3:30.
audience is the audience interested in the swag drop and our guests, by the way?
hell
Come
yeah.
on, guys. Is everybody awake? It's 1:32. Can we get a yes, sir, please? Allison Scort says that at least one person is here. Okay, here we go. Here we
There
go.
we go.
All right.
Welcome up.
All right. So click that link. I dropped it in there. I'll drop it in there again. The code is RB2B. And pick one item. There's 4 of them.
Is there any
Gosh,
new
I love
items?
this. One is a blurred out t-shirt with my fucking face on it.
Adam, which one of these makes the best firewood? Which burns the best?
Yeah, I don't know. Definitely not the tumbler. It's made out of metal. Everything else probably will burn pretty well.
Oh, that's awesome.
So before we hop into that topic, Pete, which I have
Yeah.
really an interesting answer for, especially given, kind of where retention.com's been in the last 30 days. Josh, do you think anybody could do to us what you did to us now? Or was that like a unique thing with where 5x5 was with that acquisition you made or whatever?
It's a good question. I think it would be hard. I think that we were in like a very particular place to do what we did. I think there was 3 things that we had to have to make that work. One, we had the data advantage with 5x5 and Nick Weldon.
Yeah.
2, we were VC backed, so we had a bunch of money. So I am curious to get into Pete's question to talk about like the pros and cons of that. And then 3, we don't have the following you have, but we do have a pretty good go-to-market engine, right? Like between our head of
Yeah, for
marketing,
sure.
yeah, like we've built something special there as well. And like a lot of the founders I speak to, their biggest question is like, just dude, how do I get distribution, right? Like how do I get out into the market? And so I don't know. I think we were poised in like I won't say never, but I think we were poised in a really particular way to do what we did to RB2B.
There you go. Makes me feel better.
I hope so.
Makes me feel better.
Yeah.
Okay.
Also, we have this philosophy of like the megaphone. It's like eventually people will have to go like to make a different bet because of the megaphone. It's like
Yeah.
it's just going to be too annoying to be next door to all the time. That was like another kind of philosophy we had. Like as the competitors started popping up, it's like we think that's like a limited period of time,
Yeah.
which
Yeah.
proved to be true.
And kind of what I alluded to before, it's like for the ICP that we're going after, the quality of the business is just so bad that
Yeah.
like you would have to have this megaphone to
Yeah.
like make it work. It is a sub VC scale business, like full stop, period, boom.
Yep.
So that brings us to the next thing that Pete brought up. Do you want to start, or should I start with this? Because
I
I've
want
just
to
got,
hear yours.
yeah. So like, look, like, what am I trying to do at this point? In 2022, I thought we had a unicorn with retention.com. We were selling this identity stuff. We focused on big Shopify guys. I thought our churn metrics would like turn to looking like Klaviyo's. I now truly believe, from my experience in talking to investors, that there are categorically high churn product categories and categorically low churn product categories. When you sell leads and intent data as a SaaS, it's going to be high churn, because when you rip it out, the only thing that you don't have are those leads, right? So, and I think that I've talked to a ton of people who've had high churn businesses since, over the last 4 or 5 years. It's like, try to build other products so that, you have different departments using it maybe, or like people stick around for one of the 3 things they're buying, or, go way up market and start selling to people who test things over the course of 2 years, right? Because that will just look better than SMB who tested over 3 months. So meanwhile, we shifted our entire business to try to make it look investable or saleable. Annual contracts. The Shopify guys didn't want them, but we were doing it anyway. And instead of these Klaviyo revenue metrics, it's like we got a bunch of competitors, and the revenue was contracting instead of expanding. It was just a disaster. About 4 months ago, somebody with the help of our executive coach is just like, why are we trying to sell annual deals for this high churn product to a persona that doesn't want that? Like, it's just introducing a ton of friction into this offer for a product that works, right? Like, the only reason people switch is to go to some other solution, right? Like, so it kind of led to this epiphany where we were getting, and I think this is an important example. This comes back to being a bootstrapper. At the end of the day, I'm just trying to make money, right? Like, I should not care if the amount of money I'm going to get from a Shopify guy is $1,100 a month, which is like what it was before. If it was an annual deal, kind of like $550 a product, or like no contract canceling time, $79 up front plus 10 cents an email, right? So like, if you think about those two offers, one, sign my $12,000 a year annual contract, or get started for $79 plus 10 cents. The $79 plus 10 cents is like 100 times better of an offer than what we had been selling for 2 years. So like, we started that in December. Unsurprisingly, it's going really well. And what I don't think I could have stomached a year ago until I sort of woke up to this is like, in bare metrics, our MRR appears to be going like this, but we're replacing it with literally the exact same dollar amount that's like metered. So like the net, and it's like that business has been sliding. It's now stabilizing, right? So like, I'm focused entirely on, we're looking at our sort of like, whatever you call it, like approximated annual run rate. We're at like 30 million total with both businesses right now. I think it's a really good shot. We'll be at 37 or 38 next year without really hiring anybody. We're dropping 12 to the bottom line. If that goes to 37 and we're dropping 19 to the bottom line, and I do that one more year, like all of a sudden this is getting to like this unbelievable business for me that like probably no one else is ever going to think is valuable. And our founders and employees and stuff like that, right? So like, that is my entire orientation, and it makes running a business like RB2B, how I'm running it, appealing. Yeah, because it's like contributing like $3 or $4 million to that profit, and it's like, okay, can I bolt on some other products that also have sub VC scale that will benefit from, this founder brand that I have. And, we currently, I'll drop a revenue dashboard in here. We have like 2,500 customers paying us $220 a month. If I can add, email outreach, LinkedIn outreach, fairly commoditized tools, but like from a trusted source in the simplest possible version of them, go from $220 to $300 a month and go from 2,500 to 5,000 customers. That's 18 million ARR. For me, that's like literally like, I can't even imagine RB2B, how wonderful a business that is. Whereas my sense is for you, that would not be good enough, right? Like for me, like I'm building that business to like plateau near 20 million ARR and like be spitting off 12 million or 13 million bucks, right?
Yeah. 100%.
So anyway, parlayed into where you're coming from.
Yeah. I mean, like the bottom line up front is like you and RB2B cash flow significant and retention.com cash flow significantly more money than Vector does. Like period, end of story, right? Like if you're a founder out there and you're trying to make money, your fastest path to that individually is probably bootstrapping or raising like the minimal amount you need to like build what you're building. For us, like one of the things you'll learn about me is like I'm not so smart on the business side, right? I have all these other things that I'm excited about building a business that made it important for me to raise money. One is like I wanted to build something big. I wanted to build something that had generational wealth and a big legacy. And I've got 23 people on my team that I want to build something really big for them and their families, right? And these are all like soft, squishy things. And if you ask me like which path puts more money in my pockets, probably not the one that I'm on, right? Like from a risk perspective. But once you're sort of down the path of venture capitalism, you kind of have to stay on the treadmill for better or worse, right? Like there's a really great article called VC Math that talks about like what venture capitalist firms need in order to have a good outcome, and how we would define a good outcome is not a good outcome for them, right? If I go sell the company for $200 million or $500 million, that's not a great outcome for, our early stage investors, which is just like atrocious to think about. And so, for better or worse, like my mentality is now shifted even further, right? Like I spend a lot of time thinking about like what is the $10 billion opportunity that we're going after. And so for us, we see this shift in go to market, and we think everyone's doing really cool stuff in Clay and outbound email and all this sort of stuff. And our big hypothesis is that this whole thing's actually going to break. Like there will be a time and place where like it's too easy to build a company and too easy to put noise in people's inboxes that triple, double is just not going to be possible for most venture-backed companies anymore. And so we're trying to solve the really big problem of like what happens when VC can't make money anymore. And we think advertising is going to be a big piece of that, right? This is going to be a channel that they go to. And so, yeah, I mean, like the takeaway from that is like we feel really convicted that building a venture-backed company was the right decision for us. But what came with that is us having like we're all or nothing, right? Like we either deliver a $10 billion like life-changing sort of technology for our employees or our shareholders, or we lose everything. Versus Adam, I think you got way more optionality for what you're building than I do.
Yeah. So like what's interesting, and by the way, like I'm like 12 years in at this point.
Yeah.
Like each one of these things was like very closely related to the last thing. And it's now become so good that like on retention.com, we're like building something that could potentially have EV. It will have no revenue for the next 24 months. It doesn't even matter. We're spending like $2 million on it. Got a great product team. So like, but like when you start bootstrapping, that's not your reality.
No.
Oh, fuck. Oh my God, my fucking internet. Yeah. When you start, I think it's important to know when you start bootstrapping, that's not your reality. Like the first, 5 years were incredibly painful, right? Like no one cares about your tiny little startup, but like you keep compounding, the growth and profitability every year. And eventually it becomes something where, I just feel like everybody in the world looks at everything as of like this exact moment. So like, it's like, yeah, I'm sure most founders would rather be in my position, but like the amount of time it took to get here was very long and very painful. And then my goal is actually to try to keep doing this for like, 20 more years. And then all of that stuff about, intergenerational wealth and stuff will have ensued whether or not I sell the thing or not. So yeah, entirely different perspectives. I prefer the lower risk path.
Yeah. Yeah. It's probably the smarter path, right? If your goal is to make money. Adam, one of the things we're always curious about at Vector is like now that we focus on, mid-market and enterprise, like as much as AI is going to replace the way we do support and, help our customers be successful, our customers want to talk to a human, right? Like
Oh
they
yeah.
pay us enough money. Like, do you think like that's a big thing you talk about, right? Is like we're 3 FTEs, we got like AI doing all this stuff. Do you think that is is that possible when building an enterprise business?
Certainly not yet. In my opinion, no. So like, no, definitely not today.
Yeah.
Maybe in 5 years or something like that. Um, the reason, so like, number one, I think it's important. Like, we actually did that stunt in August of like letting RB2B run by itself. However,
Yeah.
RB2B is probably the simplest business that's ever existed in the world. There's no sales, and it's two chatbots, one on the outside of the site, one on the inside of the site. Uh, it's also a dead simple product with very simple implementation, and the cost of being wrong is incredibly low, right?
Hmm.
So like, if you have a $50,000 annual deal that like if you give good service is going to renew, and you give shitty service and it doesn't renew, that's a catastrophic event, right?
Yeah.
Like,
Yeah.
if I'm honest with myself, regardless of the level of service that we're giving somebody, eventually people are just going to turn off our B2B because they want it to book demos and it's not.
Yeah. Yeah.
You know what I mean? So it's like, we could try to give the best service in the world.
Yeah.
I'm just not convinced that that's what's going to materially change the picture of our B2B. I think
Yeah.
adding on tangential products will,
Hmm.
and then at that point we may try to also give better service. But um, really, like, the reason I was leaning into that narrative so hard is I saw this other former pseudo competitor called Swan.
Yeah.
Like, he like took my LinkedIn course. He like was an RB2B customer. He's like, well, this is what RB2B should do. And by the way, the product those guys built was fucking amazing.
Yeah.
But the problem is it didn't really work for anybody. They like
Yeah.
built the best possible website visitor engagement thing, and there were like 1% of their customers who can actually get value from it. So what do? They move up market and they create the same thing, Unify and Common Room and like whatever else has.
Yep.
So, but at the time, the guy had positioned himself as this AI expert. And I was like, his content's crushing me and he's got a way better product. Like, I need to like come up with, and Alec, my LinkedIn consultant, he's like, can you like say anything about AI? I'm like, no. And then 6 months later, it's like, well, what can I do? It's like, I can basically, say that, literally say that AI is running our business because we're using these AI chatbots and Rob's so good at creating documentation, and then create this stunt that we're going to like leave for a week and let it do that thing. So it was that whole thing, and that push was much more a marketing stunt than it
Yeah.
was, a
Yeah.
business sort of like belief or reality.
Well, I think the thing that's interesting, and I promise I won't get political here, but like I feel like bootstrapping or VC has turned into like Democrats versus Republican. Like you believe in one and you fight with the other, and no
Yeah.
one talks about the truth in the middle, right?
Yeah.
And what I just heard you say is it's actually not bootstrap or VC. It's take a look at what kind of business you're building and figure out what the right path is. Because if you're building an enterprise business that needs to, a bunch of data to be purchased, you need a bunch of support, right? Your customers are going to expect it, then sure, maybe you need to raise a little bit of money to build that company. But if not, right, if you're building something that looks a little bit more like RB2B, you don't need to do that. And you probably have more optionality by not.
And another thing that I would say is, if you have, like, I would raise the amount of money that was proportional to the true NRRs that I had. If I
Yeah.
had like real 150% NRRs
Yeah.
and like some kind of moat, like, sure,
Yeah.
go out and raise money. You know what I mean?
Yeah.
Like that business is going to keep growing.
Yeah.
Both of my businesses have like a 60 or 70% gross churn.
Yeah.
That business is going to stop growing at some point. You're just going to have to start another business or like take the cash flow and buy one, right? To like
Yeah.
continue this thing, which is like it's what I've been doing, right? But I think that, you are correct. And there are, I did make a post a couple weeks ago about scenarios that I would raise money in, right? Like
Ah, cool.
if you some scenarios like Elon Musk for SpaceX had to raise money, right? Like he's
Yeah.
building rockets and like any hardware business, like you probably have to raise money.
Yeah.
That NRR thing, if you're playing like a finance game, like banking or like any kind of lending, like you need external funding. If you're rolling out retail, you need external funding. So there's a lot of scenarios. My only point is, and I'm sure you'll agree with this, I
Yeah.
see a lot of software founders who get early product market fit
Yep.
and they get on this path and their financial metrics don't support what, because the reality is it's like in most cases, if you take $1 VC, you can't stop growing. So
Yeah.
like you need those NRRs to keep you going.
Yep.
And if you do, it's kind of a shitty situation for everyone. So whereas there are a lot of very beautiful tech businesses that could like hang out like where mine is.
Yep.
30 million
100%.
ish in revenue, 10 to 15 bottom line. If you don't have investors, that is incredible. That is absolutely life-changing. But like
Yeah.
investors will not let that be a reality. It
No.
doesn't do anything for them.
No, you're spot on, especially if you raise enough to get a board member, right? Which for some happens at
Yeah.
seed, for most it happens at Series A. Like once you get a board member and you start to lose control, or even if you haven't lost control, but you just have this person that's got a lot of say in your business whispering in your ear all the time, like that is absolutely going to influence your decision. And keep in mind, like things have only gotten worse in VC, right? You got like Clays of the world, right, that are getting to $100 million in a couple years. Like the playbook and how much they need to return is only getting higher. So like,
Yeah.
at Vector, we think we've got something that we'll build a $10 billion company. We'll be able to return the capital that we borrowed essentially. But for most people, the reality is like that's probably not the best path.
Totally. And there is another path that I actually like. So really it's just like holding on as long as possible
Yeah.
is, I think, call it safe, call it whatever, but it's like, I think I'm in business. Like I started being an entrepreneur. Really, if you're like, why, you ask why 5 times, it's like freedom, right?
Yeah.
It's like the reason you want money is you actually want freedom. So
Yep.
it's like the VC path definitely isn't that until the exit,
Yep.
and it's contingent on exit. So I think you're maximizing your odds of freedom by holding off on doing either a venture or a large PE round for a long time. However,
Yeah.
getting a business, if you can manage to like get a business to the teens ARR that you've, kind of founder led and bootstrapped, there are some great growth equity partners.
Yeah.
If your metrics look correct, that have incredible track records, like never had a business under 2x or something like that, which is a great, you get a huge amount of liquidity. Oftentimes you only stick around for like a year and a half and then they go build the business for you and sell it again. I was just talking to a friend of mine who's like, he's like 55. He owns one of these funds where that's all they do. They like buy high gross retention, founder led, they put at least 50 million in on the initial transaction. And like they had the best year ever last year because
Yeah.
those businesses just keep growing. If
Yep.
you buy a 90% gross retention business, it's going to keep growing no matter what you do.
Yeah.
So yeah, that is like the thing that I don't have. That's like kind of the holy grail. It's like, I think you always got to be shooting gross retention. And then, the longer you can hold off before taking substantial, institutional capital, I think the higher the odds are that like that will work out really well for you.
I think that's sound advice. Are we at like a truce point yet? Are we at the point where we can like officially say like Vector services enterprise customers and RB2B does not? Are you going on
I
record?
think so. I mean, the only enterprise deals we do, other people literally close for us and hand to us, and it's once in a blue moon.
Yeah. That's fair. Well, we'll go on record and say the opposite. We are not built for startups at all, or at least early.
And you're not free anymore. And by the way, I'm like planning on doing a very massive engagement with the Clay agency ecosystem. A little $49 plan, a cute little $49 plan.
Yeah.
That I think is gonna be great for top of funnel on LinkedIn. So
it's huge.
So yeah, man. I'm glad you came on. This was like a fun show.
Thanks for having me.
Yeah.
There's less fighting than I expected. I'd seen some of your past content. I was like, man, I better bring a sweatband. This is going to get wild.
He's only fought one person on here, as far as I can remember.
A
Dude,
lot of those people aren't relevant
I
anymore.
don't have to say it, mate. Well, okay.
Clark Barron. He just any chance Clark Barron gets, dude. He just
Well, we weren't particularly building technology that was easy to ignore if you like security conscious and in high moral grounds.
Right.
Let's say that.
Well, I'll also say too, when I first heard of Vector, when you guys first came on the scene, and like we went to your website, maybe it wasn't your first iteration, but like you guys
Yeah.
hit the ground running with like a really well told story that was very clean, and that also added to our frustration with having you as an entrant.
Yep.
Yeah, I mean, just kudos to everything that you've done. I'm gonna have to talk to you about some of the ad stuff because I have some clients who, yeah. Anyway,
Yeah. We're
we'll
doing
we'll chat. Um, I love what you're building. Thank you so much for coming on. Would love to have you on in the future when you've hit that next milestone and
when we
chat about what
IPO
it's all
it,
about.
when we IPO it, and I can finally make money from 20 years from now, right? While Adam's sitting on a yacht somewhere. No, thanks for having me, guys. I'm sad we don't see you guys on the battlefield as much, but we'll be rooting for you.
Hey, and you should come on next year, and we'll sell the show as like the 5 cold email subject lines that like booked 1,000 demos.
We'll get a bunch of people,
and then we get 1,000 people on, and they'll be like, "Well, that was a great show, but I didn't learn how to spam people." So
I can't wait. I'll be there, guys.
We can do spam with ads. We can spam with ads. That could
There
be
you
great.
go. Yeah, that's
Yeah.
the future.
Well, folks, next week we have the CEO of G2. Goddard Abel is on the show, so tune in for that one. We got a lot of questions for him. I mean, we've been G2 skeptics and G2 users, so I mean, we got a lot to cover in that episode.
yeah, G2 is amazing for social proof. You know. I was man, at Robley, we were 3 million ARR. MailChimp was like 1 billion ARR. And there was a year period when I had more reviews than MailChimp on G2.
Damn.
I like smelled it. I was like, oh man, this is a great opportunity. And then like they did one campaign with G2 and they got like 5,000. We had like 50.
I remember on like sales calls, like I remember probably like Chris Ryan sitting next to me, and he'd be like, "What? You haven't heard of Robley? Check G2. We have the most reviews on there." And like using
we're
that
the
as, like,
number one
the
email
point.
service provider.
Awesome.
I got to tell
good times.
Got to tell Godard that he really kept us going for a while there.
Yeah. Well, Joshua, thank you so much, my friend. Everybody, thanks for tuning in.
Josh,
we will see you-
congratulations on everything, and thank you so much for coming on, dude.
Thanks, man. Appreciate you having me.
Take care.
Take care, everyone.
Bye.